1 first, okay? And we're going to look at this one for chapter 5, okay? So let's focus up here, guys. We don't have a lot of time, okay? We're just have this class session, and then we're going to be, meeting next time to take the test. So you want to make sure that you're maximizing your time here today, okay? So let me go ahead and make sure that we note these are what? Chapter 9. I keep saying chapter 5. I mean chapter what? 4B, right? 4B, not chapter 5, chapter 4B. So our exam's going to cover chapters 1 through 4. This is the B part. This is the expenditure part, right? Okay. Okay, good. So did we go through these at all? No? Okay. Okay, good. So we'll just go through these. And we have the City of Kent Police Department needs a new police car. A police car is ordered at an estimated cost of $34,000, and appropriate budget control entry is made. When the car is received, the actual cost of the car is $35,000, and we ask us in this one, which of the following is part of the budgetary entry that is made when the car is received, right? Okay, now I first go ahead and I just show you, even though it wasn't asked, what is the entry to order the car? We debit encumbrance, we credit budgetary control for what we estimate that car is going to cost us, right? Right? Okay. Then what? Then to get the answer for this question, you come down, and I wrote this as I wrote it twice here. We debit the encumbrances, we credit budgetary control. When the car comes in, what do? We go ahead and, we reverse the original encumbrance for the original amount by debiting my budgetary control for $34,000, crediting the encumbrance. That reverses that original entry, right? And then I set up the expenditure and credit the voucher payable for the actual amount, right? $35,000. Okay, so that's just testing that whole process there. And so if you come back up and you take a look, then when we receive the car, that would include what? The credit to encumbrance, wouldn't it? Isn't that what we just did right there? Didn't we credit encumbrance right there when the car came in? Okay. Question? Okay, good. Question number 2. Looks like the same set of facts. It's the same question. I don't know how that happened, but if that happens on your exam, you've got one of two choices. You can choose the same answer twice, or you could diversify your risk and choose 2 different answers if you have no idea what's going on, okay? Hopefully you would choose the same answer twice. Okay. All right. Which of the following is not a character classification? Remember, and I wrote that's actually chapter 2. I don't know why I put chapter 3 and 4 on here. It's actually chapter 2, and so why is it in the chapter 4B lecture? I don't know. Okay, but what happens? We put different labels on our expenditures, remember, that indicate to us the period of benefit, doesn't it? Remember, we had what? We had current as a character designation. We had capital outlay, which was going to say it should benefit the current and future period. We had debt service, didn't we? Okay. And so if we put the characterization on there, what? Activity, that is not considered what? A character designation. Activity is an activity, like building inspection, right? If we're talking about police, it's like patrols or something is an activity. We could put that label on our expenditure, but that is what? That is an activity label, not a character label, right? I told you a story about my buddy who's a cop for San Jose, City of San Jose. I'm telling you that in case you mess with me and I have to bring him in. No. He's a cop for the city of San Jose. I didn't tell you that he has this activity where he has to go and drive around the kind of funky hotels and see if he's got any wanted people's license plates there, right? So that's an activity, right? Okay, and so we could put patrol on our expenditure, but that would be an activity designation, right? These others are all what? Character. Current means it's going to benefit what period? The current period, obviously, right? Okay, good. Okay, now you come over and take a look. What are we on, number 4 now? Okay, so we say that a governmental entity, if I do that, it's going to write on it. I have to come back to the home page because I want to try to fit this all in. Okay, that's a little smaller. That's big enough for us, right? And we fit it all on the screen. Okay, so we sit here and we say that a governmental entity that uses encumbrance accounting during the year, they ordered but had not yet received a new police car. What effect will the events have on the unassigned fund balance? And I shouldn't have had in the appropriations ledger. We don't show an unassigned fund balance in the appropriation ledger. Just period, the unassigned fund balance. Okay. Now, what I'm showing you here, and you can see I'm showing you the whole set of journal entries, and I'm assuming that we're purchasing this police car for what, $55,000? Okay, so when we purchase the police car, we debit encumbrances, we credit, not purchase it, but when we order it, we debit the encumbrances, $55,000, we credit budgetary control, right? I'm just assuming that we're going to pay $55,000 for that. When it comes in, we debit budgetary control. Oh, it didn't come in yet though, right? During the year we ordered it, but what? It had not yet been received. So at year end, the reason I got mistaken, I said when it comes in, it's the same entry that we would have made if it came in, isn't it? Isn't that the same exact entry? Do we make when something comes in? We debit the budgetary control, we credit the encumbrance for the original amount. We got to close out our encumbrance entries, all of them that are still outstanding at the end of the year, right? So since this truck hadn't come in, we debit the budgetary control, we credit the encumbrance for $55,000, and then what do? Then we set up an fund balance, and I'm assuming that fund balance is assigned. So we credit the assigned fund balance for $55,000. So the world knows that we have what? We have this police car that's going to come in, and we debit what? Unassigned fund balance for $55,000 to show that that money's being set aside, right? Okay, this is just like that example, that comprehensive example that we went through last time where we had some certain encumbrances that were still outstanding at the end of the year and we closed them all at year end. You have to close all of your encumbrances at year end, right? Do I need to go back through that whole thing? Do I need to go back through that whole thing that we did last time? Huh? No? We understood that from last time? Okay. Okay, good. All right. All right, let's go ahead and let's take a look at this next one now. And we have what? We have this public school district. And the public school district had estimated revenues of $800. It had approved appropriation of $780. And we say which of the following would be the appropriate entry to record the budget. And this is that very first beginning of the year entry that we make, which is to debit the estimated revenue, credit the appropriation, and since this government had a surplus, an amount that was left over, they credit the budgetary control, don't they? Okay. Okay, good. Are you guys sure you're okay with that number 4? If it was a deficit, that means my appropriations would exceed my estimated revenues, and to make the journal entry balance, I'd have to debit budgetary control. That's right. You sure you understand number 4? Huh? Excuse me? Tell you one more time. Okay. For number 4. Because I'm still feeling some blankness on number 4. Okay. When we order goods during the year, what journal entry are we supposed to make when we order goods? Debit the encumbrance, I'll tell you what, let me do it this way. This government gets $100,000 of appropriation, and they have estimated revenue of $100,000. We'll make it 110,000. So they have estimated revenue of 110,000. They debit estimated revenue 110,000. They credit what? Appropriation for 100,000. And I guess they're going to have a what? Credit to bud control. They have a surplus, right? Of $10,000 here in this example. Right? Right? Okay. Okay, then what? Then they go ahead and they set up their appropriations ledger. And when they set up their appropriations ledger, they do it this way. They go ahead and they put the appropriation. Let me do it this way. Hang on a minute. I got an idea. Hang on 1 second. This thing is getting slow. Okay, this is what I want. Okay, so what happens? We go ahead and we have that appropriation of 100,000, right? Okay, and so we're going to go ahead and set up the appropriations ledger. And the appropriations ledger is going to have a column for appropriations. I'm going to sit down, guys. I don't know why they don't have a podium or something here. So I typically don't like to sit down, but I feel like I'm just hunching over this thing. So I'm going to have a column for appropriations. Those are credits, aren't they? I'm going to have a column here for my encumbrances. Encumbrances are debits, aren't they? And then I'm going to have a column here for my expenditures. Are those also debits? Hello? And then I'm going to have a column for the balance. Okay? So when I credit this, I'm not going to rewrite the journal entry that I put on the board. Debit the estimated revenue, credit the appropriation, credit the budgetary control for the $10,000 surplus, but it clearly was a credit to my appropriation for $100,000, right? Right? Now, when I sit there and I get my revenues now, they said the revenues, and let's say the revenues, because it doesn't have to match the budget, let's say the revenues end up being $100,000, right? So when I get my revenues, I debit cash for $100,000, and I credit the revenue for $100,000. Do I have $100,000 cash now? Yes. With me so far? Okay. Okay, good. Now I go ahead and I order that police car, don't I? And when I order that police car, didn't I, and I would have, in the little example, I debited encumbrances in the problem that we were looking at that got us into this whole thing. I debited encumbrances for $55,000, is that right? And I credited my bud control, right? for 55,000. Still with me? Okay, so since I debited my encumbrances, what happens? Before I did that, the balance in the appropriations ledger was 100,000, wasn't it? Okay, but now I go ahead and I debit my encumbrances for 55,000. And when I do, this is telling me now that my available appropriation is how much? 45,000, right? Now let's say this is the only two transactions this government records the entire year. They got some cash, they ordered something that hasn't come in yet, right? Okay, so I go ahead and I prepare my balance sheet, and I'm going to just stick my balance sheet over here, all right? When I prepare my balance sheet, do I have any cash? I have a cash of 100,000, don't I? Okay, good. I don't have any liabilities, right? That was the only transaction that happened the whole year, so I know my liabilities are zero, aren't they? So my fund balance is sitting there. My fund balance is sitting there at 100,000, right? Now, if I stop right there, that's looking like an unassigned fund balance of 100,000. Is it truly unassigned? Is it truly unassigned? The reality is I've got that stupid encumbrance that's coming, right? Okay, and so what I do is I go ahead and I have to close my encumbrances. So I simply do what? I debit Bud Control for 55,000 and credit what? Credit my encumbrance for 55,000. That's closed now, isn't it? Okay, and then I go ahead and I debit the unassigned fund balance for 55,000, and I credit the assigned fund balance for 55,000, right? And when I do that, how much is in the unassigned now? How much is in the unassigned now? On what planet? If I sat there and I have the unassigned, guys, come on now. Unassigned, I just told you was what? 100,000 over here, right? I just told you it was unassigned was 100,000. And I just did what? I just debited it for 55,000. What's the balance in here now? 45,000 is the balance, right? So my unassigned is how much? What? 45,000 is the unassigned. And I now can report what? An assigned fund balance of 55,000, right? Didn't I just credit the assigned fund balance right here for 55,000? Did I just credit the assigned fund balance for 55,000? It's no different than if I sat there and debited the unappropriated retained earnings and credited appropriated retained earnings for some amount, right? Right? Okay, so now when someone looks at my balance sheet, they sit there and they say, I see what's going on. Yes, you have $100,000 cash, but not all of that cash can be used however you want. Some of it has been set aside. Now, it doesn't call out on the face of the balance sheet that this is for encumbrances, but we know because of our detailed understanding of this transaction that this is for that encumbrance, don't we? Right? Right? Make sense? Hello? Okay. All right. So when you look back now at, where were we? Right here? Okay, now when you look back at that question, what happens? They tell us a police car that you ordered that you had not yet received, what effect is it going to have on the what? On the unassigned fund balance. Oh, I struck out in the appropriations ledger because you don't really show unassigned fund balance in the appropriations ledger, right? So what effect is it going to have on the unassigned fund balance? It's going to do what? It's going to decrease it, isn't it? Because we have to sit there and set up that fund balance for the amount that for the encumbrance. Hello? All right? Okay. Okay, good. So let's go ahead then and let's take a look. We did this next one, right, where we just did the budgetary entries. So we're good for number 6 now? Okay. So let's take a look at number 6 here. And we say that the county general fund, number 6, the county general fund includes budgetary revenues of $900,000 and budget expenditures of $890,000. Actual revenues for the year were $915,000. To close the estimated revenue account, and notice, guys, we do what? At the beginning of the year, we debit the estimated revenue, we credit the appropriation, we credit the budgetary control, right? Then what happens? At the end of the year, don't we simply reverse those? We close all of our budgetary accounts, don't we? Okay, so we go ahead and we debit the budgetary control, we debit the appropriation, we credit the estimated revenue. Is that what they did? Okay. Okay, good. Let's take a look at number 7. Number 7, Carolina City places an order of a specific item of equipment and encumbrances. For equipment and encumbrances of $6,000. The equipment arrives at an invoice price of $5,700. Which of the following entries should we make upon receipt of the equipment? Well, let's first order the equipment. And when we order the equipment, we do what? Debit the encumbrances, credit the budgetary control. That's to order the equipment. Right? Then what happens? Then when the equipment comes in, we go ahead and we reverse the original encumbrance entry for the original amount, debit the budgetary control, credit the encumbrance to close it, right? And then we debit the expenditure, we credit the voucher payable for the actual amount, don't we? So the only thing that made this, worthy of our attention here is the funky way they presented the answer, because they show me the debits together and then the credits, right? So they say what? We would debit expenditure for $5,700. Is that what we did? Be nice if I underlined the one I'm talking about. We debit the expenditure for the $5,700. This needs a highlighter. Debit the expenditure for $5,700, right? We go ahead and we do what? We debited the budgetary control for $6,000, right, when the stuff came in? Okay? And then what do we do? Then we went ahead and we credited the encumbrance for $6,000, and we credited the what? Voucher payable for the $5,700. And they call it accounts payable. I call it vouchers payable. I think vouchers payable is more accurate, but more practical. This is what the Government Financial Officers Association would probably call it, vouchers payable, but whatever. We're not going to get into an argument with them about that. Okay. Question? Okay, good. Let's take a look at number 8. A city uses, we're not going to do 8 and 9. We're not going to do inventory on this test. If I try to give you how to account for inventory now, your head's going to explode. So even though that is part of Chapter 4, we'll do it after the exam. So don't worry about accounting for inventory. Keep that handout I gave you because I don't want to copy it and hand it out again. We'll do it after the exam, though. Okay? We're not going to do, there'll be no inventory accounting on this exam. Okay? It's too much. You're going to So that's what I got to do to make you clap for me, okay? I could sit up here telling stupid stories, the whole works, but let me pull back on some of the stuff that's going to be on the test, I get a roar from the crowd, right? Okay, I get it. Okay. All right, so let's go ahead then and let's take a look at what? Number 10 then, right? Okay. Okay, so we say that in our statement of revenues, expenditures, and change in fund balance, a transfer received by the debt service fund from the general fund should be considered a transfer in, and that was what? An other financing source, wasn't it? Okay, and so what did we do? We go ahead and in the general fund, they have what's OFU? That's what I say to you when I think about governmental accounting, right? We have what? We have our general fund, other financing, use, transfer out. That's the one other financing use, isn't it? I debit that, I credit cash, right? And then what? Then I go ahead and in the debt service fund, since they're getting the money, they obviously debit cash. They'll credit the other financing sources transfer in, right? Which was the point of this question. Which was the answer to this question. Okay? Okay, good. Come over. Number 11 now. And this is a comprehensive question. Number 11. Okay? And what they were doing here, and I won't give you one like this on the exam unless you want me to. What you needed to do with this question is you needed to sit there and figure out what journal entry should be made for all this stuff. You sure you don't want this question? This is kind of fun, isn't it? Okay. So notice we have what? We have estimated amounts of revenue here. We have our appropriations over here, don't we? Right here is my appropriations. Right? And then I have an excess of estimated revenue over appropriations, don't I? Can you pull together a journal entry from that? Go for it. Who wants to do it? Debit estimated revenue. Good. Debit estimated revenue for $13,800. Good. Credit the appropriations. Good. For the what? $13,000. Good. What do you want to do with that 800? You're on fire. Budgetary control. Good. So maybe you guys do want this question. Okay. And that was what was down here in the solution, guys. So if you're having a little trouble reading exactly what I'm putting here, notice I also gave you the solution down here. Okay. And what I did here is I went ahead and I teed up some of these. But I'm going to go ahead and add to my list of accounts that I'm going to tee up. I'm going to go ahead and add Bud Control. Okay, that's my Bud Control. And I did just what? I just credited it for how much? $800. So it has a balance of what? 800? With me so far? Okay. Okay, good. And my appropriations and my estimated revenues, I guess I'm not going to tee them up, guys, because they're not very interesting. They're going to sit there, and then they're just going to be closed at the end of the year. So just use your imagination for the tee up of those, just to save me the agony of having to write it here on this stupid thing, right? Right? Okay. Okay, good. So then what? Then we go ahead and we encumber stuff. And we encumber stuff to a tune of what? Total $12,400, right? Who wants to give me the entry for the encumbrance? Debit the encumbrance, good, for $12,400. And credit what? Bud Control, good, for $12,400, right? Still with me? Okay, and I come over down here, and let's see if I showed you that entry correctly down here. There's that same thing. I just showed it to you right here, didn't I? Okay, same thing right there. And I went ahead and I entered the encumbrance, and I decided this afternoon I want to add this budgetary control to this example. So I'm going to go ahead and I'm going to stick in the 12,400. Could they give a brother a podium here? I mean, this is like, you know. So what does this come to now? 13,200? I mean, I've had to lean on a bar before, but it's usually after I've had a few drinks. You know, I feel like I'm, okay, somebody take me home. Okay? All right, so we got this, right? Okay? Okay, good. So that's 13,200. Now what happens? Come up, and we look at this column over here, and they tell us that the estimated cost for amounts received was 10,900, while the actual cost was 11,200, right? Okay, who wants to give me the journal entry for this whole thing? We had an estimated cost of 12,400, and it's come in at 10,900. What do you do when the goods come in? Debit the budgetary control. For, hang on, let me rewrite that. Yeah. Let's fix that. So debit what? Bud control? For the 10,900? For 10,900? The estimated amount, okay. 10,900. And credit what? Credit the encumbrance, good, for 10,900, right? What else? I have to set up the expenditure, don't I? Isn't that what we do every time? How much was the expenditure? 11,200, and we credit cash. I'm going to do vouchers payable. 11,200? Okay. And so what happens? You go ahead and you look at the solution down here. And is that right? Debit the budgetary control, credit the encumbrance. We just did that, right? And we're going to go ahead and debit the expenditure, credit the vouchers payable, which we just did. Okay. And so now we look at our encumbrance. There's our original encumbrance. Some of that stuff has come in. We're still expecting stuff that we've ordered to the tune of 1,500, right? That stuff's still supposed to come in, right? Okay. And I'm going to go ahead now, and I've added budgetary control to this discussion, to these T accounts over here, these ledger accounts. So I guess that was a debit to budgetary control for 10,900. Okay, good. What's the balance in here now? 2,300. Still with me? Still with me? Okay, good. All right, so now we come over and we look at this mess and we sit here and we say, okay, I've pretty much sat here and I've done my budgetary, I've ordered some of my goods, right? And then they come over here and they tell me, uh-oh, we've got what? Actual revenues of, and they tell me it's 13,000, but they say 1% is uncollectible, right? So that means that the amount that I'm going to collect is actually going to be what? 0.99 times what? times, no, 0.99 times X times my what? Times my tax receivable is going to equal 13,000, right? Because they're telling me that the amount that I'm showing here is net of the uncollectible amount, isn't it? Right? So I go ahead and I say then my taxes receivable must have been 13,000 divided by 0.99, right? Because they were telling me that was net of my uncollectible amounts. Okay, so what's that number come to? 13,000 divided by 0.99. 13,131, you say, sir? And 13 cents? 31 cents? Okay, whatever. Okay, good. So what am I going to do? I'll write it up here. I'm going to debit my tax receivable, remember, for the total amount that I'm mailing the bills out for, which is this 13,000, what, 131? Give or take. But I think I'm only going to collect 13,000 of that, right? So I only credit the revenue for how much? 13,000. I have no idea why I decided to drop that E. And I'm going to have what? I'm going to have the allowance here for what? This amount that I think I'm not going to collect, which is this 131, I guess. Isn't that journal entry? It needs to be made there. So you see how I'm taking this whole set of facts and using what we've studied about in Chapter 4 about how to deal with my, now we're doing a little revenue stuff, even though we're in the 4B part, but this is now the totality of Chapter 4, isn't it? Okay, and so we come down and you take a look at this question, this answer, and did they make that journal entry down here? Yes, they did, right? There it is. Same entry we just made. Hello? Okay. Okay, good. So now, are we done? No, you needed to realize that, hey, I have to close everything, don't I? Okay. So now what? Now you go ahead and you sit there and you credit and you close. And I would do this if you get a question on the exam. Just remember, it's closing my beginning of the year budgetary entries. And so I just go ahead and I do what? I debit my appropriations. I debit my budgetary control. I'm going to go ahead and debit that for 800. I didn't do the appropriations because it's not very interesting. We credit it. We debit it, right? I'm not going to sit here and write it so you see it go up, it goes down, but it is going to end up 0, isn't it? So now what? Now we got 1,500 left in here. Okay. And then what? Then I go ahead and I still have that 1,500 of my encumbrance outstanding here that I want to get rid of, don't I? Okay. And so what do? I go ahead and I debit budgetary control now for 1,500. Is this 0 now? Is that 0 now? Right, I just put that debit in for 1,500. Kind of hard to see there. I debit that for 1,500. That's 0. I credit my encumbrance for 1,500. And when I credit my encumbrance for 1,500, is he 0? Well, that's good because I need all these accounts to be 0, don't I? Okay. Then what? Then I go ahead and I close my revenue accounts just like you would in commercial accounting, which is to do what? Debit my revenue to close that, credit my expenditures to close them, right? That's just closing the revenue and expenditures accounts, right? Just like you would in commercial, but instead of closing it to income summary and retain earnings, I close it to my unassigned fund balance, right? Now this problem told me that they had a beginning unassigned fund balance of 1,500. Okay, in the fact pattern at the very beginning, they just tell me that there's a beginning fund balance of, let's see how nuts this thing's going to go. Not too bad, I guess. They tell me the beginning fund balance is 1,500 here somewhere. Down a little bit. There it is, the beginning fund balance. Thank you. The beginning fund balance is 1,500. Okay, so I got the beginning fund balance of 1,500. So I'm sitting there with this 1,500 in the beginning fund balance. And then I go ahead and I do what? I just closed out my real accounts by debiting my revenues, crediting my expenditures. So unassigned fund balance is sort of like my retained earnings. I credit it, right? So now the balance is what? 2,300. And then I do what? Then I go ahead and I have to close my, set up my unassigned fund balance, right? Okay, excuse me, my assigned fund balance for that encumbrance that's still outstanding. So I close the encumbrance, and then I go ahead and I set up the unassigned fund balance for that encumbrance that's still outstanding, just like we saw in that example we were just looking at. So I debit the unassigned fund balance, and I credit the assigned fund balance, right? For that encumbrance that still hasn't come in. So the total in my unassigned fund balance is now 1,800, isn't it? Which was the beginning balance that I had, plus what? Plus the $300 of appropriation that I have not set up yet for anything, right? If you look, I had total appropriation of 13. I've spent 11.2. 1,500 has been what? Has been spoken for the encumbrance, so I'm left with 300 of my current year appropriation that I can pretty much have available for spending. Okay, and all I reminded you here, guys, is, hey, if we want to, we might commit that for some purpose. Our legislature will what? Earmark it, and they'll say, hey, since we got this $300 left over, we're going to put it aside for the schools or something. They can do that, can't they? They have that option to commit it for some purpose if they wanted to. So we had the 1,500 now left that they told us was unassigned at the beginning of the year in the fund balance, right? If we did this. Hello? This is comprehensive example number 2 in a way, even though it was in the format of the test. This is the same, we went through this whole same process in that example that I gave you the other day, right? We set up the appropriations, we set up the estimated revenues, we had the actual revenues coming in, we closed everything at the end of the year, we closed all our budgetary accounts, and the only thing different we did in that one was when we pulled the financial statements, which I'm not going to do here. We pulled the balance sheet, we pulled the income statement, right? Okay?
Do we still need to know the taxes receivable portion of this for the test?
Yes. What do you mean, know the tax receivable portion? Do you know how to do what we just did?
Yeah.
Do you mean if I give you that the revenue was the net was 13,000? Do you need to know how to do that? Divide by 99 to get the tax receivable? Is that what you're saying to me? No, that you don't need to know. I think I just gave the points for that one. I don't care about that. Okay. Question? Okay, good. Let's go ahead then. How should the city's general fund report the acquisition of a new police car? Come on, guys. There's no way you can walk out of this class not knowing that. That's like the easiest thing in the world, right? Right? So if you get pulled over by the police, what do you say to them? Why'd you pull me over in that expenditure vehicle? Okay, no, don't say that. Okay. You say, what's the problem, Ossifer? Okay. All right, number 13, what happens here? When goods received at a cost of $9,700 that are encumbered in the prior year for $10,000, which of the following entries should be made? And what are we going to do? We're going to debit expenditure for the actual amount, debit budgetary control for the estimated amount, right? Credit my encumbrances for the estimated amount, and of course credit my, they're calling it accounts payable, I like to call it vouchers payable, whatever, right? Looking sharp, right? Okay, question? Okay. Okay, good. Let's take a look at number what? Number 14. Okay. The city of Denton uses encumbrance accounting to control expenditures. It charges the cost of outstanding purchase commitments to expenditures in the year they are received, not in the year they are ordered. Of course, we've been they don't need to tell me that. If they did do it, put it to expenditure in the year they're ordered, they're messing up, aren't they? Okay. Then what? If the city had 11,000 of purchase commitments outstanding at the end of year 1 and received those goods during year 2 at a cost of 11,700, what would be the impact on the total fund balance for year 2 now? And the green is the answer. Total fund balance at the end of year 2 would be what? Would be 11,700 less than at the end of year 1. Total fund balance, right? Okay. Let's just go through and let's figure that whole thing out. I'll do it over here on this sheet that I had. So someone's got to feed me the numbers, though, okay? Okay, so hang in there. So let's just go through the whole process. So they said they ordered them in year 1 for how much? 11,000 even? Okay, so I'm going to debit estimated revenue for how much? 11,000, and I'm going to credit what? Hello? Not estimated revenue. Oh, that's why you're sitting there looking at me like that. What do I debit when I order these things? Debit encumbrances. No wonder you guys are like, huh? I debit encumbrances for how much? For 11,000. Good. And I credit what? Bud control for the 11,000, right? With me so far? Okay. Now, I'm going to tell you that this company has, this government has cash of 11. How much did they pay for that thing in the next year? Okay, 11,700. Okay, so I'm going to sit here and I'm going to tell you that they have cash of $11,700 cash, and that's all they got. No other assets. Their liabilities are zero. Their fund balance is $11,700, and it's unassigned, right? It's unassigned? Okay, 11,700. Okay, now, year 1 comes to an end, and that stuff still hasn't come in yet, right? We know for the fact pattern it's not going to come in until year 2. So what am I supposed to do at the end of year 1? Close it. I'm going to do what? I'm going to debit the budgetary control for how much? 11,000. I'm going to credit the encumbrances for 11,000. That closes that whole thing, doesn't it? It's gone now? Do I have to do anything else? What? I have to set up the unassigned fund balance, don't I? Okay. So what do? I go ahead and I debit the unassigned fund balance for what? For the 11,000 and credit what? Assigned fund balance? Still with me? For $11,000? Right? And so when I look at my balance sheet now, how much cash do I have? 11,700. I have what? No liabilities. I have a unassigned unassigned of $700. I debited it. It was 11,700. I just debited it, so it's now 700, right? Right? Okay. And then I have what? And I have a assigned fund balance of 11,000, right? Right? Still with me? Okay. So, now we come into By the way, notice my total fund balance is still the same, isn't it? Total fund balance, the assigned plus the unassigned is still 11,700, right? Okay. Okay, good. Now I come in and I go ahead and I'm into what year now? Now I'm into year 2, and I'll use blue for year 2. See how poetic? I bet you didn't think you were going to get poetry today. Blue for year 2. Isn't that beautiful? Okay, and what do I have to do? I first sit here and I reestablish the encumbrance. I reverse everything I had done at the end of year 2. So what am I going to do? I'm going to debit the assigned fund balance for, the assigned fund balance for what, 11,000? I'm going to credit the what? Unassigned fund balance for 11,000. And I'm going to set the encumbrance back up. I'm going to debit the encumbrance for how much? 11,000? And credit the bud control for 11,000. Now, guys, I'm not going to rewrite the balance sheet. You're going to have to use your imagination a little bit. Doesn't the balance sheet go back to this? The balance sheet's back there now, isn't it? Okay. Okay, good. Now the stuff really comes in, doesn't it? In year 2? And when the stuff comes in, what am I supposed to do? What am I supposed to do when my stuff comes in? Don't say make room for it. Move stuff around so there's room for it. What am I supposed to do when the stuff comes in? I'm going to reverse the encumbrance entry, right? So I'm going to go ahead and I'm going to debit bud control for 11,000, and I'm going to credit what? Encumbrance for 11,000, because now that stuff came in, didn't it? Okay. Now what do you want me to do? Huh? Set up the expenditure. Good. So I'm going to debit expenditure for how much did it come in for? 11,700, and I'm going to credit, let's just say I'm going to credit cash. Pay cash for that, 11,700. Still with me? Now, I go to the end of the year, don't I? And I'm going to make my closing entries for the end of the year. And at the end of the year, I'm going to do what? I'm going to credit my expenses for 11,700 to close that, and I'm going to debit the unassigned fund balance, right? For 11,700. This is a closing entry, guys. This is just like if I had retained earnings, right? I'd debit retained earnings, I'd credit the expense accounts to close them, right? Right? And this is the only transaction that happened. There's no revenues. Right? So now I can make my balance sheet for year 2. How much cash do I have? On what planet? I had $11,700 cash and I just spent it, didn't I? How much cash do I have? 0. My liabilities are what? 0. I just did what? I just sat there and I debited my unassigned balance for 11,700. So my unassigned fund balance has how much? 0. Did my unassigned fund balance come down in year 2? Did my unassigned fund balance decrease in year 2? Yes. By the amount of the expenditure? Did it decrease in year 2? Yes. Unassigned fund balance by the amount of the expenditure? Yes. Okay. So let's look back at that problem. Meanwhile, back at the problem. 14, the city of Denton using encumbrance accounting, it charges the cost of outstanding purchase commitments to expenditure in the year they are received. They better, not in the year they ordered. If the company had 11,000 purchase commitments outstanding at the end of year 1 and received those goods during year 2 at a cost of 11,700, what would be the impact on the fund balance for year 2? And we say that the total fund balance at the end of year 2 would be 11,700 less, wouldn't it? You had to go through a lot of hellfire to get there, but that's the answer, isn't it? Question? Okay. Okay, good. Number 15. Washington County receives goods that had been approved for purchase, but for which payment had not yet been made. Which of the following accounts should be increased when we receive goods? We should increase expenditures, right? And we do what to encumbrance? We credit it. We decrease the encumbrance, right? In fact, we zero it out for that particular item anyway, don't we? Okay, good. Number 16. Which of the following cases would be the reserve? Oh, it's budgetary control. Reserve for encumbrance is the obsolete terminology that I'm still chasing all the textbook makers across America around about, and none of them will fix it. They've halfway fixed it in one book, and then they didn't fix it the rest of the way. I stopped looking after I saw that they fixed it in whatever it was, chapter 1 or 2 or 3 or something. I was like, oh, beautiful. I stopped looking. And then when I finally got to chapters 5 and 6, they went back to their evil ways, right? Okay, so it's called, but so sometimes it's still in the test bank, and I don't catch it all the time. So it's what? Budgetary control. So in which of the following cases would the budgetary control account be decreased? Goods related to the purchase order are what? Received, right? Okay, good. What number are we on now? 17. Which of the following does not affect the excess of revenues over expenditures? Remember, guys, I put a star next to that item. I said that was like the operating income, and I was absolutely going to ask you a question about that. Here it is. That is what? That is before we get to the non-operating section, which is the section that has our other financing sources and uses, isn't it? Right? Okay. So what? Transfers are not going to affect the operating income, the excess of revenues, deficiency of expenses, whatever, over revenues, right? That's right off of that statement of revenues, expenditures, and change in fund balance. That's like chapter 2 stuff. So you're like, well, why are you asking it in chapter 4? I don't know. That I can't answer. Okay, let's take a look at number 18. Which of the following would be classified as an other financing source? Use, transfer, well, it's a source if it's transfer from, right? The Internal Service Fund. Okay. The changes in Scotts County General Fund balance for the year, and they want to see if I can figure out what to do with these for the change in fund balance. What's the change in fund balance? What's the change in fund balance like? Like net income, right? Right? And we figure out net income by taking revenues minus expenditures. Okay, so isn't the answer here going to be what? Revenue of 14,200 minus what? The expenditures of how much? 14,000 what? 800? So we've got a negative change here, don't we? Decrease to 600,000? I mean, that question is basically saying, have you kept your eyes open for 10 minutes in this class, right? Okay, it's a pretty easy question. Okay, good. We're making good progress, guys. That's it? Oh. Okay. Okay, so that is the chapter 4B. But I can really tell you guys, this is the nature of quite a few of the questions that you're going to get on your test, okay? We're going to go ahead and we're going to take the break right now, and when we reconvene, we will now look at sort of a comprehensive exam question that I put up, and that's really all I got unless you want me to do something else with any extra time we have, like go back over that example or just answer questions in general, and then next time we meet, we'll be ready for the test, right? Okay, but let's go ahead. Let's take the break, and we'll see how we stand after we go through that second example. Let's take about, what, 10 minutes? 15 minutes or 10 minutes? 15? Okay, we'll take 15. We'll reconvene here in about 15 minutes. Oh, okay, guys, let's go ahead and let's get started back now. And we're going to go ahead and look at the more comprehensive um, practice exam here now. And you can see that this was a test that I gave last semester. Okay, so I think this was a pretty easy test. I don't think yours is going to be this easy. Okay, because we're going to have more of those type of questions, I think, that we saw from Chapter 5 just now. When I looked at this midterm, I was like, no, this was too easy, so I can't do that this time. All right? Okay, so let's just go ahead and let's take a look at these questions. And I've tried to put the chapters that they came from a little bit to give you a sense. But again, I think I'm going to put more from Chapter 4B next time, not 5. 5 will be on the next exam, but 4B. Okay, so let's just take a look. Derived tax revenue, retail sales, classic example of derived tax revenue. They derive their value from the underlying transaction, for example, sales, right? Another example of derived would be what? Income taxes. Good. They derive their value from the underlying generation of income, right? Imposed, classic example was what? Where the government just imposes the amount on you. That is what? Property taxes, fines would be an imposed, right? Okay. Okay, good. Which of the following best describes the recognition standard for derived tax revenue? And we take derived tax revenue when the underlying transaction takes place, right? And then we continue on, subject to the 60-day time restriction associated with what? With modified accrual. Do we do that for full accrual? For full accrual, we don't have to worry about that 60 days. That's a modified accrual accounting trip that we have to worry about, right? Okay? Okay, good. Let's take a look at number 4 here. Property tax revenue levied prior to the satisfaction of a time requirement, okay, in advance of the period in which the revenue were intended to be used. Remember, we had quite a few problems where we mailed out the tax bills in, say, 2016, but they were for 2017 activity. So when we mailed them out, we still debited the tax receivable, but we credited what? Deferred inflow because we hadn't met the time requirement yet, right? Okay. Okay, good. Number 5, the city of Crossroads installed red light cameras to automate the enforcement of traffic laws with the specific intention of finding individuals who run red lights, you think? The city would recognize revenues from fines when what? When we have a legally enforceable claim, nobody is no one is any longer disputing that, right? Okay. Okay, good. Number 6, the city of Parker issued traffic citations for vehicles parked in locations with expired meters. Citation charges $50 upon discovery, and then $25 for each hour after the vehicle is not moved or the meter is not paid. A citizen received a citation July 1st for $150 for the discovery charge plus 2 hours before the vehicle was moved. The citizen successfully challenged a portion of the citation, paid the what? $50. I guess they paid what? $50 for the discovery, but they didn't want to pay for the period that it was moved, whatever. Okay? And so we say that how much fine revenue should we take? And it's what? It's the 50. That's the part that they admitted to, right? And so we know we had a legal enforceable claim for that, and they paid us, right? So we took that $50. Okay? Okay, good. Number 7, a city levies $200,000 property taxes for its current fiscal year. 1% of the tax levy is expected to be uncollectible. The city collects $170,000 of its taxes during the year and another $25,000 during the first 2 months of the following year. What amount of property tax revenue should the city report in the general fund financial statements? And it's what? General fund, what rules are we using? Modified accrual. Modified accrual, we have to have what? Either collected it or we will. And guys, I'm going to be more careful. This is still when I was in a mode where I thought 60 days was from God. And I learned later that, hey, 60 days is somewhat of a rule of thumb, right? It's more of a guideline than a rule. Not a rule of thumb, but it's more of a guideline than a rule. So I'll be more careful in the future to call out 60 days. But assuming 60 days here, then we'd have to take the amounts that we either collected during the year or what? Within the 60 days, right? Okay. Now, notice I ask you the same question, but now I ask you in our government-wide statement, so we know we're using what? What type of accounting? Full accrual accounting for the government-wide, right? In government-wide, full accrual, we don't worry about the 60 days, right? Okay, so we simply do what? We simply take it for the amount that we had mailed out the tax bills for, right? Okay? Question? Okay, good. Come over. Number 9. A city, what is this, the same question? City levels $200,000 in property taxes for its current fiscal year. 1% of the tax is expected to be uncollectible. The city collects $170,000 of the taxes during the year and another $25,000 in the first 2 months of the following year. In addition, the city collects $30,000 of prior year taxes during the first 2 months of the current fiscal year and $2,000 during the remainder of the current fiscal year. And this is leveraging off of that chapter 4 exercise where we had the amounts that were going into March. Remember, they became revenue of the current year, and amounts that were collected in January and February could still be counted revenue of the prior year. Okay, so when you pick up the amounts, we pick up what? The 170 that was for the taxes for the current year, the 25,000 that we got in the first 2 months of the following year, and then what? Then we do not pick up the what? The 3,000, because that was for prior taxes during the first 2 months of the current fiscal year, and then another 2,000 during the remainder of the current fiscal year. That we do pick up, right? Because that got outside of that year's 60 days, and we include it, right? Okay. These are easier than the questions you had in your chapter 4A quiz, aren't they? So maybe I'll bring some of those 4A quiz questions in to your test. Something like that. Don't say no. Say, got it. Write that down. Look at Dano. Okay? Okay, good. All right. Then what? Number 10, a city receives notification of a grant award and the actual proceeds 60 days prior to the start of the grant period. The entry to record the grant in a special revenue fund. Special revenue fund's a governmental fund, isn't it? And we were told, and we actually got the money prior to the start of the grant period, right? Okay, so when we received the money, We will debit what? Grant receivable for, well, we actually got the cash, didn't we? So we might as well go ahead and debit the cash for that, for whatever it was, and credit what? Deferred inflow, because we got the money before the start of the grant period. We haven't met the time requirement, right? Okay. What should we do in the following year when we enter into the grant period? So this is year one. Now we're in the grant year. What do you want me to do? Debit the deferred, good. Inflow, and now we can take the revenue, right? Very good. Time requirement, right? Okay. Okay, good. Let's take a look at this one, number, 11? These guys got beat up on revenue recognition, didn't they? Last semester? Okay. Okay, so number 11, the county received a $150,000 restricted grant from the state government to be used to improve the public safety department's communication system. The county will not meet all the eligibility requirements for the grant until next fiscal year. If you don't meet eligibility, you are what? You are an unearned revenue. You're still a caterpillar, aren't you? Right, because you haven't met eligibility. Got to meet eligibility and time to be a revenue. And you got to meet what? If you meet eligibility but not time, you can be a deferred inflow. If you don't meet eligibility, you're what? Unearned revenue, right? Okay. Okay, good. The city of Ruth has been awarded a $1 million federal grant reimbursement to improve bike trails. The city has incurred $418,000 in qualifying expenditures during the current year, for which the federal government has reimbursed the city $180,000. How much should the city of Ruth recognize as revenue for the current year? Let's just go through this whole thing. They're awarded how much? $1 million federal grant reimbursement, isn't it? It's a reimbursement. So they're going to debit grant receivable for how much? 1 million. And credit what? Huh? They're going to credit what? They have to spend the money to be eligible, don't they? And when they first get the grant, have they spent any money? They haven't spent any money yet, right? So it's what? Unearned revenue. For $1 million, right? Okay, now they start to spend some money, don't they? And so they start to spend $418,000. So they're going to debit expenditure for how much? $418,000. And they're going to credit cash, right? For $418,000. Right? Anything else they should do? What's the requirement to be eligible for this money? You have to spend it in a reimbursement situation, don't you? So anything else they should do? I already credited cash for what I spent. What's the eligibility requirement? What's the eligibility requirement? Have to spend the money on the bike trails, have they? So have I met my revenue recognition rule? Have I met my revenue recognition requirement? For reimbursement, you got to spend the money, right? Okay. Remember, I said it's like the Don Corleone taking care of you. Don't worry, whatever you spend money on, I'll take care of it for you, right? So they told us they're going to take care of it for us. Have we met their revenue recognition requirements? Okay. So what are we going to do? We're going to debit the unearned revenue. Of what? 418,000 and credit what? Credit revenue of 418,000, right? So do we take revenue of what? 418? Right? Okay. Now, I can't figure out why I had D highlighted. And so I went back to my email and I searched on the author of the book that I got this question from. And sure enough, there was the email where he said, "Oh, I'm sorry. Yeah, we put D as the answer. I have to plead innocence because I don't put the questions together. Somebody else does. Sorry about that." Meanwhile, this person is a member of the GASB. Okay, and so they had the wrong answer in the book. I don't know where they got this 180,000 for a reimbursement grant. The criteria is what? You spend the money, don't you? What they reimbursed has nothing to do with it in terms of the revenue recognition. Now, of course, they're going to get the money eventually. They'll debit cash and they'll credit what for this 180,000 that was the wrong answer? Grant receivable, right? Because we got the money, right? Whenever it comes in, they'll finally go ahead and debit the cash, credit the grant receivable, right? But the revenue recognition is leveraged in a reimbursement type situation, is leveraged off of what? Off of what you spent. Okay? Okay, good. Number 13. A city receives notification of a grant award and the actual proceeds 60 days prior to the start of the grant period. The entry recorded the grant in the special revenue fund is debit to cash and what? Credit to, now this is credit to deferred inflow because what? There is a time requirement. There's no what? Eligibility requirement, but there is a time requirement, isn't there? So they get it prior to the period into which it's going to be able to be used. They'll actually be able to use it in the next period, right? That's a time requirement. The other one was eligibility, and that they had to spend the money to be able to be eligible for that, right? So this one's treated as a deferred inflow, right? Okay. So if they go ahead and they give them the money, they debit cash, they credit the deferred inflow, that's in the 60-day prior period. What do you want them to do when they actually are in the period? Say if this is year 1, say year 2. If this is year 1, what do you want them to do in year 2? Debit the deferred inflow, credit the revenue now, right? Because they're in the period in which they can use the money, right? They've met the time requirement. Okay. Okay, good. So that was like 13 questions on the revenue recognition for this one, for this test. Okay. All right, so let's take a look at this one. I don't think you're not going to get 13 questions this time. I might give you like 4, something like that. What? No, 4 is harder than 4B is easier than 4A. Well, you say that now because you've spent time with 4A. Once you get 4B under your belt, you'll feel 4B is easier. I mean, you don't want me to start getting, first of all, a couple things. Your test is what? Wednesday next week? Okay, do you want your test to be easy? Okay, root for the Raiders to win on Sunday, okay? Because usually I'm sitting there doing your test on Sunday, and if the Raiders lose, I start looking for really hard questions, okay? Okay, so they're playing Baltimore Ravens. They're not going to win. In fact, I'm trying to figure out if I should put. Anyway, stop, John. Okay. I got a fantasy team. I'm going to put Joe Flacco as the quarterback, I think. Okay. So anyway, we sit here with number 14, and we say, which of the following has the highest level of authority for a government in the governmental gap hierarchy? GASB, right? Okay, so that's an easy question. In which of the following, by the way, if you're wondering what's all this stuff, I think this might tie to the practice midterm questions. Okay, so I'm basically saying, hey, if you look at Chapter 2, practice midterm 1, question 4, it might be in there somewhere. From chapter 2? Maybe not. You might see a question similar to these, though, in your practice midterm. So I would say your whole body of study is what? Is your practice midterms, your what? Your quizzes, the slides. And if you're really confused on something, you can even go back and watch the lecture again, can't you? Okay, I had a kid today from Accounting Business 20 comes and says, should I just buy the book and start reading the book? And I'm like, well, look, you might want to watch those lectures. They're sitting there. So if there's a particular area and you don't have to watch the whole thing, let me look at revenue recognition again. You could fast forward to it, right? Okay, and they're all in Canvas now. What I recommend you do, though, is click on YouTube and take it out of Canvas. I've embedded them in Canvas, and it gives you that little tiny box. If you just hit YouTube, it takes you to YouTube, and then you can do the CinemaScope or whatever you want, and it'll take up your whole computer screen, right? Okay, might be a better way to watch those. Okay, number 15. In which of the following financial statements should a government not report depreciation expense when we use modified accrual? We don't have equipment. We obviously don't have depreciation, and so we're going to do that in the governmental fund financial statements. All of the others up here, the fiduciary category, the proprietary category, and the government-wide statements all use full accrual. They're going to have equipment. They're going to have depreciation, right? Okay. Okay, good. Number 16, the availability criterion for the revenue recognition applies to all of the following except answer internal service fund, because internal service fund is a full accrual accounting fund type, and so we are not going to apply. Now I forgot what the question was. The available criterion, right? Available criterion gets to that 60 days. Remember, guys, all revenues are subject to what? Eligibility and time. But for the modified accrual, we say we've got this available trip going on, which brings in the guideline 60 days or whatever we say. If we say it's 30 days, whatever in the question, then we'd use that, right? Okay? Okay, good. Let's take a look at number 17. In which fund may government report capital assets? All of these other are governmental funds. Only the enterprise fund is not a governmental fund, and all of the other funds report capital assets, right? And the government-wide statements. Question? Is there a question on that one? No. Okay, we're good. Okay, the basic financial statements include all the following except, and combining statements, remember we said were optional, weren't they? Okay, but don't forget, guys, you will get some questions that are going to expect you to understand that you have the MD&A. MD&A is what? Required supplemental information, and then you're going to see what next? The basic FS, which includes the notes, doesn't it? And then down here you have the what? RSI other than MD&A, right? The combining statements were optional. Remember when we went through that? The combining statements for the non-major funds, and I showed you how they showed a column, and if you wanted to, you could provide the detail that rolled up to that column. I think it was 359,000 or something was the total of those columns, right? Okay. Okay, good. Coming down, basic financial statements include what? The government-wide, the fund statements, and the notes there too. The MD&A is up there. The first thing you see is part of the required supplemental information, right? That little picture probably going to answer 3-4 questions on the exam. Okay? Okay, good. Come over. Government-wide statements include, and there's 2 of them. Remember I said you have to know the names of all the statements. Remember that one slide where I had all the names in red? All the names of the statements in red, and I think I put some stars on that. I put stars on that slide because I think that a lot of times you just look at this, oh, okay, whatever, these are the names of the statements, and then I start calling out to you, asking the names, and then they even become important in some of the revenue recognition questions when I say what should be reported on the statement of activities. You're supposed to know that's a government-wide statement. You're supposed to use full accrual accounting, right? So don't mess up and not know the name of these statements. And so in the government-wide, its statement of net position is like the balance sheet, and the what? Statement of activities is like the income statement, right? Okay, good. I think I got rid of this question. To account for a donation to the city where the principal is to remain intact forever and the earnings are to be used to benefit the Boy Scouts and Girl Scouts organization, the city, the government should use what type of fund? Yeah, answer is private purpose trust fund, and so I struck that question out because we haven't really talked about the private purpose trust fund yet in the nature of its activity. We know that it is a fiduciary fund, and that's really all we know about it right now. And I put that question on the exam last time because I thought it was asking about the permanent fund until I read it more carefully after I gave the test, I think, and I'm like, oops, that's the private purpose trust fund. So what happened to that question? Huh? Did I give the students the points for that question? Yes, I did, because I messed up, okay? Because we hadn't talked yet about the private purpose trust fund. So, anyway, so that question won't be on your test. We'll talk more about what the private purpose trust fund does later. A statement of revenues, expenditures, and changes in fund balance is required for what? For the special revenue funds. That's the name of the income statement, right, for our governmental funds? Okay. Which of the following would not be considered a fund financial statements? Statement of activities, that's a government-wide statement, isn't it? Okay. Now, note that only the proprietary funds prepare a statement of cash flows, right? But it's still at the fund level, isn't it? Okay. A statement of cash flows is required for the enterprise fund. It's one of the proprietary funds. They're the only ones that prepare a third statement, right? Okay. This one, a city receives a donation from a citizen who specified that the principal must be invested and the earnings must be used to support operations of a city-owned recreational facility. The principal of this gift is what? In the permanent fund, which is very descriptive in terms of what it's doing. You're maintaining the principal, aren't you? And you can only spend the interest. I told you the story about Ms. Hayward's in here, right? I didn't tell you the Ms. Hayward story? Some people are saying yes, some people are saying no. Look, I tell my dumb stories for a reason, because that they're going to get one of these. I didn't tell you the story of Ms. Hayward's. Who's the founder of Hayward? Bill Hayward's. I didn't tell the story? Okay, so Bill Hayward's is the person who is the first mayor of Hayward, and they named the town after him. Now, what happens? That land was actually given to Guillermo Castro. He got it as part of a Spanish land grant. Okay, so he gets this land, but he has a problem in that people come and squat on his land, okay, which is current Hayward. And so Bill Hayward's comes and squats on his land. Hayward comes to California to sell shoes to minors. And when I say minors, I don't mean kids under, age. I mean miners, gold miners, right? So he comes to sell shoes. So he's a shoemaker. And what happens? Here comes Guillermo to kick him off the land. And Hayward presents him with a beautiful pair of boots. Okay? So he gives him these boots. And Guillermo says, well, I guess we'll keep this guy around for a while. Right? And so what happens? He go ahead and he lets him squat for a while, but it turns out that Guillermo liked to gamble. Okay? And so since Guillermo likes to gamble, he gets a little strapped for cash, right? Okay? And so he turns to Hayward and says, do you want to buy this land that you've been squatting on? Guillermo says to Hayward. Hayward says, sure. He buys the land. He builds a hotel on that land. So Hayward in those days was a resort town. Like if you're, believe it or not, like if you're trying to get from Berkeley to San Jose, you're going to stop in Hayward and change your horses and stuff, right? So it's good to have a hotel there, right? Then Hayward gets himself on the Alameda County um, um, Development Committee, whatever they call it. And all of a sudden, all the roads start coming by Hayward's Hotel. Isn't that great? Okay, so he makes a little more, makes a name for himself, and eventually they make him the first mayor of Hayward, and so now we have Hayward, right? Even though his last name was Haywards, they dropped the S some years ago, and so now it's called Hayward. So what happens? Let's say the great-great-granddaughter, Bill Haywards, wants all the little children to come to the middle of the city, to this park, to hear about the history of her great-great-grandfather. And the city of Hayward says, sorry, we ain't got the money. We can't afford that. She says, no problem. Here's $200,000. Hold the principal forever, but you can use the interest to run the park. Okay? So what happens? Hayward would account for that in a permanent fund, very descriptive name of that fund, and then what? You maintain the principal, and then you can do what? You can live off of the interest, can't you? Okay? Now, every time I tell that story, somebody's tuning out. And I see a couple people right here in the front tuning out, right in front of me. I'm going to listen to anything about what he's talking about. And then you get to this question. A city receives a donation from a citizen who specified that the principal must be invested and the earnings must be used to support operations of a city-owned recreational facility. And they missed this question because they tuned. We never talked about that. There it is, right? Okay, so when I tell you one of these dumb stories, it's not because I want to hear myself talk. It's so that you can sit here and tie it back to something that you're seeing on the exam, right? Okay? Okay, good. Now you come over and you take a look at number 27, and we say that a portion of special assessment debt maturing in 5 years, if it's maturing in 5 years, is it current or non-current? Non-current. Where do we report non-current liabilities? On the government-wide statements, right? People have trouble with that one because they don't catch the 5 years, right? Okay? Okay, good. How about this one? A city government would report each of the following categories in the government-wide statement of net position, except, do we have governmental activities? Huh? We don't have governmental activities on this statement of activities? Statement of net position? You forgot already the setup of that thing? Really? Huh? Guys, we went through this thing 52 times. We have what? We have governmental activities. We have business type activities. We have what? Component units. We sat here and did a chant to this, right? Okay. All right. So, which test is it? Where's it at? 28. So we have governmental activities, right? We have our business type activities, and we saw the component units. What about the fiduciary activities? Not reported, right? Where's my pappy? All right. You think I do all these things to be cute? Okay, I'm trying to get you to remember these things. Where's my pappy? Pappy is not reported up there, right? Okay. Okay, good. Come over and let's take a look at which one? 29. Okay, so we say for governmental fund types, which item is considered the primary measurement focus? It is what? current financial resources measurement focus. And remember, guys, in chapter 2, since we're going back to the chapters now a little bit, chapter 2, that very last slide, I think it was, or close to the last slide, this one, I put stars on it, right? Because that slide would have answered that question, right? Oops. Which one are we on now? The Word file here? This one? Okay, number 30. That's that same slide, right? Okay, so that's going to be what? The government-wide economic resources accrual accounting, right? That's an easy test. You go through those two things that we talked about, that's an easy test. Now, a couple things that you didn't see that I could see me including on the exam. I didn't ask you anything about the comprehensive annual financial report. Nothing, right? Comprehensive annual financial report, which has what? Has the introductory section, right? Has the what? Financial section, which is basically that GASB 34 reporting model, and what? And the statistical section. So I didn't ask anything about that, did I? So I can see that I probably got to add something on that. 1 or 2 questions. What else? Questions? Yes. What happened to what? Oh, good question. Last we hear from Guillermo, you mean? Last we hear from Guillermo, he's headed to South America. And they never heard from him again. So I have a feeling he was getting himself in a little trouble here in California, right? Because he got the land Spanish land grant, so he was kind of like a spoiled kid, you know, and he, like most spoiled kids, he went to his head, right? And he started gambling and, you know, living the lifestyle in the 1800s. He had a ranch. He called it San Lorenzo was his ranch. He had a ranch, San Lorenzo, and he had a big hacienda there. And, you know, he was doing well. I went to a bar near there, and the name of the bar is called The Ranch. And I walked in there. I said, do you know why you guys are called The Ranch? And they're like, because there's a cow's head out there? And I said, no. They called The Ranch because Guillermo had his ranch just down the street from here. So after that, nobody talked to me for the rest of the time. So that's how interesting my stories are. Okay, so anyway, yeah, so that's what happened to him. He took off. And that's the last we hear from him, right? Bill Hayward's is buried in Lone Tree Cemetery in Hayward. So, anyway, like you care, right? Okay. All right, any questions? Any questions, guys? Okay, look, I will be here on Monday and Wednesday. Don't forget my office hours at 3 o'clock. You're going to probably be boxed out by my Business 20 students on Monday because their exam is on Monday. Okay, so if you need to see me, I can get here as early as 2 o'clock on Wednesdays if you need some questions to ask or if you want to email or call or whatever, all right? Okay, guys, study hard. Oh, skinny green Scantron. The one that has the 50 on the front, 50 on the back. Everybody knows what Scantron I'm talking about? Huh? Okay. If you say so. All right. Okay, guys.